of Research at WealthMills Securities, joining in with his views on the morning edition of Business Today Television on Market Today. Warm welcome, Mr. Badini. Good to have you with us. Tell us, how are you looking at the market setup? Every day there is a lot of volatility that we are seeing at this point in time. We're testing 22,800. We're bouncing back at the same time as well. So we do know that the bulls don't want to just give it up all, and we also do seem to see that perhaps there is this fear. We've tested this level so many times over. Are we at the risk of breaking this for once and for all, and are we going to see that one sharp dip before the markets start to recover? How are you looking at the market, sir?
Yes, actually, all of a sudden, the market sentiment has changed. In fact, market sentiment is at a weak note at this point of time. Thanks to the DIS, they have been safeguarding the markets to hold this level. But these are the crucial levels, actually. We need to wait and watch how markets are going to hold on. But one thing what we observed is there has been a froth that built up especially in the mid and small cap space, that has been taking off at this point of time. Of course, it's like losing the extra fat in the in the market. Okay, always the fat losing process is not easy. Okay, it is something like okay, it's very painful. That's what the pain what we are facing at this point of time. Right now, investors has to keep in mind, okay, what they have done in the market in the past 2-3 years. It doesn't make any difference to create wealth going for the long-term wealth is concerned. What they are going to act at times like this is going to make a difference. Definitely, this market is going to differentiate men's from the boys. What stock we hold, what stock we buy is extremely crucial. It's not going to be a generic kind of a market going ahead. The stock specific actions are going to be there in the market at this point of time. We need to wait and watch.
Right. Absolutely. So you did point out, right, sir, that stock specific is going to be the way forward for investors to really look at this point in time. Let me ask you on a few stocks, sir. Then how are you looking at the current trend? Let's start off with the banking space. The Nifty Bank is recovering smartly from the opening lows, and we are seeing SBI also inch higher. Now, this is as far as post Q3 earnings are concerned and the reaction on that. Now, we have varied brokerage houses reports on SBI. There are some that are cutting the targets, like HSBC has cut the target to 800. Morgan Stanley has an 865 target with an equal weight call. Nomura is very bullish. It has a 4-digit target of 1,000 on SBI as well. So some are saying it's mixed quarter, soft NIMs, robust loan growth, asset quality is also robust. There is strong ROE outlook, valuation still attractive, but definitely softer NIMs at this point in time, and margin pressure is driving down ROA at this point in time. How would you look at these mixed performances coming in for the largest public sector bank here? And at 729, how would you look at it as an opportunity for fresh investors, sir?
Sakshi, in terms of the risk reward is concerned, SBI looks very attracting at this point of time. I don't think so. There can be a big downside is concerned in SBI, and I love to buy SBI if there is any dip in the stock. But investors with a moderate risk appetite or low risk appetite also, one can add SBI at this price point time. I'm sure there will be a further earnings improvement going ahead in SBI. So
Okay, fantastic. The defense names are pulling up today, interestingly. Let's look at that. We were discussing the same space with Mr. Gaurang Shah before you joined, Kranti sir. And I want to now understand what is your view on the defense space. You have discussed this space quite a lot on our channel before as well. You have always had a positive view on the entire space from a long-term perspective. But, I just want to ask you from the retail investors' perspective, those which were riding on the uptrend that, had continued to catapult the stocks much higher in a very short period of time. And therefore, this FOMO emerged in retail investors. They bought the stocks at higher levels. Then the stocks have corrected 30, 40, 50%. Even with the recent uptick that's come in, there's a long way to catch up. Now, what's happening is that the retail investors are not getting the confidence to buy these stocks at 30% lower or 40% lower, not knowing whether this could be in hindsight seen as the best opportunity to average out. How would you really look at a GRSE or a Mazagon or a Cochin shipyard? HAL has fallen so sharply, being the leader of the pack, but the recent concerns emerged on its delivery as well. How would you look at the entire space, and where would you still see confidence that investors can continue to slowly and gradually build on their positions?
Yes, Sakshi. Very good, interesting theme you brought. Sakshi, we need to look at defense in a way. One thing is these stocks have been in a momentum zone from the past 24 to 18 months are concerned. And in fact, many of the defense stocks have been multi-baggers for the investors. You name any defense stock, if you would have bought these stocks in the portfolio, it would have been a 2x to 5x kind of returns these stocks have given. Majority of these stocks in the past 24 to 36 months also. So, but of course, we have witnessed some kind of some stocks going ahead of the valuations, and their PEs have quadrupled in many of the stocks. So, whenever you find any kind of this kind of a momentum kind of a zone, that's where the retail interest will get into the picture. And normally that's the point one need to be cautious in terms of the valuations are concerned. Here,
Hmm.
we have witnessed many of the theme runs in the market earlier. There was a technology, media, telecom kind of a rallies used to come, and we witnessed real estate rallies, and also currently at the current bull market, what the theme we witnessed, what we are witnessing is a defense. But defense theme is a strong theme. It is going to be long lasting. But here, whenever there is a bull market, some kind of wolves also get into the picture. Okay, somebody makes one kind of prototype, and they'll say we are getting the approval for a gun or a missile or something. Okay, whether one need to check, and every company they are starting giving a template of we are into defense, we are into defense. So that's where investors need to have the caution always, whether these companies have the executing capabilities, and
Yeah.
how the earning visibility and order book. These are the prime things one need to keep in mind. With respect to the stocks, what you mentioned, like the names like HAL, Garden Reach, Mazagon Dockyard, Cochin Shipyard. Okay, these are the large cap stocks. They have a strong earning visibility and also the execution capabilities. So one need to be a little bit cautious with respect to the small cap or the other companies who are just entering into the market at this point of time, just naming themselves as a defense company. That's where one need to be cautious and exercise their caution at this point of time. And it happens if there is a classic bull run. Okay, some kind of froth will be definitely built up, but ultimately what you own is extremely crucial at this point of time. Definitely, I am still bullish with respect to defense stocks are concerned. This current correction and the ongoing correction in many of the defense stocks, it gives a good entry opportunity for the investors. They need to be very stock specific at this point of time. Of course, they run ahead of the valuation, but what we ride is extremely crucial with respect to defense investing is concerned.
Okay, defense index itself is up by 3%. That's the kind of move that you're looking at this point in time. I mean, like something like a Zen Technologies is up 10%, and you have smart moves that are coming in on various stocks like GRSC. You have, Mazagon Dock. All of these stocks are actually moving up very, very smartly. High single digits can be seen across the board. HLBL also recovering in trade. You can actually see a whole host of momentum that's building on afresh on these stocks at this point in time. So keep an eye out on defense names. A fresh move may be starting at this point in time. So you keep an eye on this one as well. Let's also talk about some of the other underperforming stocks, sir. Mr. Patini, I'll ask you on the auto space and within that on Tata Motors particularly. Why am I asking this today? Is because CLSA has come out with a report. They have upgraded Tata Motors today, and they've upgraded it to high conviction, outperform rating. Target price, however, still remains unchanged at 930. Now, they believe that adverse near-term outlook is giving scope to enter at a favorable price for retail investors. They have said that the stock has already corrected 40% in the past 6 months on account of weak demand and the outlook on JLR on key markets and the domestic PVs and the space how that has been muted too. But they believe at the current levels, at 683 odd levels, this could be presenting a great opportunity for retail investors to make a fresh entry. How would you look at Tata Motors at this point in time? There are investors who are stuck at over 1000 odd levels and they have been just holding on. First, they were looking at a long haul consolidation. It's not just tested 800, it's not just tested 700. Now it's hovering at around 680 odd levels. What would you say, sir?
Sakshi, Tata Motors is concerned, as you mentioned accurately, the stock got corrected from a range of 1100 level. Uh, what unfortunately, what happened is investors have a choice with respect to the EV space is concerned at this point of time. Hyundai Motors post listing, after you just compare with the Hyundai Motors and Tata Motors, uh, investors have a choice. The institutional investors have a choice with respect to India theme is concerned. In India auto theme is concerned, they have a one more OEM, that is Hyundai Motors. The fresh flows are getting into Hyundai Motors because they have a better portfolio when compared to Tata Motors are concerned. And also the financial looks very attractive with respect to the Hyundai Motors. So that is the reason the fresh money is not coming into Tata Motors at this point of time. And also the stock has been struggling in this range. At this point of time, Tata Motors, in terms of the valuations is concerned, looks very attractive. And also, with respect to the JLR portfolio is concerned, we can see some kind of signs of a picking up of demand with respect to the China market is concerned. So, investors with a long-term horizon, investors with high risk appetite, one can add Tata Motors. Investors with a moderate risk appetite, one can add Hyundai Motors. So investors have the choice to choose between Tata Motors and Hyundai Motors at this point of time. We are on a longer term basis, Sakshi, we are quite bullish with respect to automobile industry is a concern. Look at the M&M, when they announced their recent launch of vehicles, the kind of booking that's taking place. So still one end of the pyramid, there is a immense demand, and one hand there is no demand at this point of time, especially in the entry level segment is concerned. The demand is very slow, but whereas the high end, the mid end of the spectrum of the industry is concerned, there is a huge demand. That's where the OEMs need to focus going ahead.
Fair point. I also wanted to ask you on one other pocket, sir, and this is the entire, pharma space. Why am I picking this up? Is interestingly because there is this Macquarie reports that has come in. They have initiated their coverage on the entire CDMO space too. So that's something that I wanted to discuss. Pharma space is on the back foot today um, because they have a high US exposure. Given the tariff threat, there are many stocks that are down today. You have 7% down on Oro Pharma, Cadila is down 5%, Lupin down 5%, Dr. Reddy's down 3%. So the pharma stocks on the one hand are declining, but at the same time, Macquarie has initiated this coverage on CDMO players. They believe India's CRDMO sector is at an inflection point. And Divis Labs and Suvin Pharma, they believe they stand out as the product-led CDMO players, and they believe there could be sharp improvement that could be coming into some of these players as well. They have given their uptick and outperform rating on Divis, on Suvin, on Syngene, and on Blue Jet Healthcare. How would you look at these stocks? They have various targets on these ones as well, about a 25, 19% to 30% kind of an upside that they see.
Sakshi, with respect to pharma is concerned, a majority of these pharma companies, they have been the outperformance in the recent past. Past 1 year, pharma has been outperforming. And with the new Trump tariffs are concerned, right now is targeting the pharma imports into US also. And today the news is going to impose 25% of tariffs with respect to pharma imports are concerned. So that's definitely going to impact the medium to short term sentiment of all these pharma companies, because majority of these companies are going to derive around they have exposure around 60 to 80% on an average. They derive the revenues from the North American region. So this is going to impact in the medium to short term. But pharma is an essential service. I don't think so. There will be a major long-term impact. Definitely, with a consensus and a negotiations, they're going to achieve some kind of a reduction in tariffs going ahead. Because ultimately, if the Trump administration is keep on imposing tariffs, end of the day, they are going to face the fire in terms of the inflation and also the rising imports also. Overnight, they can't develop the specializations in pharma and other sectors. In US, there comes up with gestation periods. It's going to have a medium-term impact, but I don't think so. It's going to have a long-lasting impact with respect to pharma companies are concerned. So, as these companies are run up and outperformed, some kind of a profit booking, what we are witnessing at this point of time, some kind of selling pressure is getting created on these companies in the short term. On a medium to longer term perspective is concerned, investors with moderate and less risk appetite, one can add pharma companies in these dips. Still, they can get 15 to 20% kind of returns by picking up these pharma companies. Of course, it is medium to short term, some kind of selling pressure they're going to witness, but long term, I don't think so. It's going to have a major impact on these companies.
Okay, fair point. Mr. Batini, before I let you go, any key stocks that have come afresh onto your radar, sir, that you believe investors can keep an eye out on, since we are talking about, everybody's discussing this could be the last leg of the pain that we are looking at. There could be some more downside, but after that, we could be looking at a recovery. If that has to take place, any key stocks, and you did point out that it's a market which is very, very stock selective. Any fresh ideas that you could share with our viewers, sir?
Sakshi, I remain with the same ideas what I share with the viewers. The domestic centric stocks looks very attracting. They are less vulnerable with the external shocks at this point of time. So look at the Indian finance sector, the banking at this point of time. The valuations looks attractive on a longer term basis, and also the domestic infra themes are also concerned. Stocks names like if I have to mention, Afcon looks very interesting to me at this point of time. Afcon Infra, the newly listed entity, and also the stocks in the defense, the current dip in the stocks. Okay, one can try to accumulate these stocks for a medium to long term basis. Very stock specific at this point of time, Sakshi. But definitely, Sakshi, one thing is, of course, there is pain what the investors are witnessing at this point of time. But come after 1 year, okay, we will be remembering this day we missed the opportunity. Always the rear view in stock journey very clear, but windshield is never clear. So on a longer term basis, the stocks are going to outperform. And also, Sakshi, the bear periods are coming down when you have to compare, but whereas the longer term bull days are going up. But always the kind of damage done by the bears is always painful, but that's where the real opportunities emerges.
Okay, fair point. Well, thank you so much, Mr. Badeni, for being with us in the morning edition today. Viewers, it's good to see that the markets are back in green. There's been a smart recovery in the first half an hour of trade. We've seen, we had seen 0.5% decline in opening as far as the Nifty was concerned, and over 1% cuts for the broader markets. But there you see, the Nifty is now at